Welcome to the Deep Dive, where we cut through the noise of earnings calls to bring you the insights that truly matter.
Glad to be here.
Today, we're digging into Universal Display Corporation's Q2 2025 results. And this one presented a fascinating puzzle, didn't it?
It really did. Yeah, a bit of a head scratcher. You've got record performance, strong beats, a raised outlook.
Everything you'd want to see.
Exactly. And yet, the market's reaction, pretty subdued, almost flat.
So we're here to unpack what actually happened in the quarter and maybe more importantly, what that disconnect means if you're watching this space.
Let's get into it.
Okay, so let's dive right into these numbers because honestly, Universal Display absolutely crushed it in Q2 2025.
No question.
Their GAAP EPS, that's, the main profitability measure, hit an impressive $1.41.
Yeah, and analysts were only calling for what, $1.17 to $1.19. So a really significant beat there.
Definitely blew past consensus. And revenue also came in strong, between $171.8 and $172 million. Again, way above the expected $161.6 million or so.
Right. That's a nice year-over-year bump, too, like 8.2% to 8.4%. So solid top-line growth.
And it wasn't just the headlines, right? The underlying stuff looked good, too.
Absolutely. Gross margin last year, better efficiency.
Okay.
And net income saw a healthy jump as well, $67.3 million versus about $52.3 million the year before.
Nice increase.
Plus, they declared the quarterly dividend, $1.45 a share. So you look at all those financial metrics, it points to a really strong quarter, fundamentally.
Which brings us back to the puzzle, because this is where it gets, really interesting.
Right.
Despite these fantastic numbers, despite the positive commentary from management on the call, the stock actually dipped a bit, about 1.2% in after hours, down near $145.
Yeah, not the reaction you'd typically expect after results like that.
So what gives? What's behind this disconnect between great results and, frankly, a pretty cautious market reaction?
That is the core question. And I think to understand it, we need to peel back the layers a bit, look at the financial structure. One really interesting thing is the shift in their revenue mix. You saw material sales actually down year over year, $88.7 million.
Oh, really? Down? Why was that?
Well, they said it was mostly due to customer mix and somewhat lower unit volume on the material side. But here's the flip side.
Okay.
Royalty and license fees jumped significantly, up to $75.7 million.
So they're making more from the IP, less from selling the actual stuff.
Exactly. It's a rebalancing towards those higher margin licensing revenues. And that seems to be a key strategic point for them. It offers, more stability potentially.
So less reliance on direct material sales cycles, more on the underlying tech adoption through licenses. Sounds smart long term.
That's the idea.
Yeah.
Management actually put a number on it. They think the 2025 ratio of materials to royalty licensing revenue will be around 1.3 to 1.
So still more materials, but the gap is closing.
Precisely. It clearly shows how important that licensing model is becoming for them. It validates the long-term value of their patent portfolio.
And wasn't there another little surprising bit in the revenue? Something outside the main OLED business?
You got that too. Yes, their Adhesive contract research business.
Right, the life sciences thing they bought ages ago.
That's the one. It reported $7.5 million in revenue this quarter, which is quite a jump from $3.5 million in Q2 last year.
Interesting. Not huge money compared to OLED, but still.
Still, it shows a bit of diversification, another income stream, even if it's totally separate from their main display focus. Add a little resilience.
Okay, so good numbers, interesting revenue mix shift. What about the outlook? Did they give strong guidance?
They did. They raised the low end of their full year 2025 revenue guidance, now looking at $650 million to $700 million.
Raising guidance is always a good sign.
Definitely. And they also expect operating expenses to actually decrease year over year by a low single-digit percentage. That's better than they thought before.
Lower costs, higher revenue.
And operating margins. They expect those to be at the upper end of their 35% to 40% range.
Wow, okay. So that's not just a minor tweak. That's real confidence in their execution and, I guess, the underlying demand, right? Even with broader worries about the economy.
It certainly reads that way. A pretty solid vote of confidence.
Now, the CEO, Steve Abramson, he used this phrase. Something like the OLED industry is entering a dynamic new phase of expansion. Sounds pretty big.
Yeah, that definitely caught my ear too.
What's driving that? Is it just more phones or something bigger?
It's definitely bigger than just phones. The main engine here seems to be the OLED IT market. That's tablets, laptops, monitors.
Areas where OLED hasn't really broken through yet in a big way.
Exactly. Right now, OLEDs are less than 5% of that whole IT display market. But the forecasts are huge. Omdia Research thinks OLED IP units will more than double.
Double?
Yeah, from about 23 million units in 2024 to nearly 49 million by 2027.
Okay, that's a massive runway for growth if they can capture it.
Huge. And it's really just starting.
And it's not only IT, right? You mentioned automotive before. That seems like another major push.
Oh, absolutely. Automotive is another big one. The projections there are, frankly, kind of staggering.
Yeah.
Over 300% growth expected.
300%? Wow.
Yeah, from maybe 2.8 million units in 2024 to over 9 million by 2029. We saw some of those concepts at Display Week back in May.
Like the transparent sunroofs and those huge dashboards?
Pillar-to-pillar dashboards, exactly.
Yeah.
It really points to a radical shift in how car interiors are going to look and feel. Much more digital, more immersive.
So to actually make all these bigger screens for IT and cars, they need new factories, right? That's where these next-gen fabs come in.
That's the bottleneck, or rather, the enabler. These new Gen 8.6 OLED fabs are absolutely critical.
Gen 8.6, what does that actually mean in simple terms? Just bigger?
Essentially, yes.
Okay.
Think much larger mother glass substrates that can be cut more efficiently into bigger panels like for laptops, monitors, or those wide automotive displays. It's about economies of scale for larger screens.
Got it. And who's building them?
The big guys. Samsung Display, BOE. Their first Gen 8.6 fab should start coming online around 2026. Visionox is apparently ahead of schedule with theirs.
Okay.
And LG Display is pouring almost $1 billion into boosting their capacity. TCL China is looking at building one too. It's the start of a major investment cycle across the industry to meet this demand.
Makes sense. You need the capacity before you can sell the products. Now, switching gears to the tech itself, they mentioned an AMML platform. It sounds very sci-fi.
It's pretty advanced stuff. AMML stands for Artificial Intelligence and Machine Learning. It's their proprietary platform.
What does it do?
Well, they've apparently had it for over a decade. It models how molecules interact at the atomic level.
Whoa.
Yeah. And that lets them discover and optimize new phosphorescent OLED materials, the stuff that actually lights up much, much faster, especially for reds, greens, yellows, and the really tricky one, blue.
Blue. There was definitely buzz about blue phosphorescent OLED, or POS OLED, on the call. Why is achieving good blue phosphorescence such a big deal?
It's often called the holy grail for OLED efficiency. Getting commercial level performance for blue PHOLE on a mass production line, which a customer has now apparently verified, that's a massive milestone.
Why? What does it unlock?
Energy efficiency. Potentially up to an additional 25% improvement in how much power the display uses.
25%? That's huge for battery life.
Huge for battery life, huge for reducing heat in devices. Think about wearables, phones, laptops. It's a foundational improvement that benefits basically everything.
Game changer, then.
That's the term they used, and it feels appropriate here.
Yeah.
It's also worth mentioning tandem architecture quickly.
Tandem, like 2 layers.
Exactly. Stacking multiple light-emitting layers. It makes the display brighter, more efficient, and last longer. It's more complex and costly.
Right.
But you're seeing it more in premium IT and automotive displays where those benefits really matter.
Yeah.
So expect a mixed tandem for high-end, single layer for others.
Okay, so wrapping all this together, incredible innovation like blue PHO, strong financials, huge growth markets opening up in IT and auto. We still land back at that same question. Why the caution from the market? The stock's down significantly over the last year, lagging way behind the semiconductor index, the SOXX, and overall market, the SPY.
It just doesn't seem to quite add up on the surface, does it?
Not really.
And that is the key puzzle. The market's immediate take seems, well, disconnected from the fundamentals and management's positive tone. Maybe it's lingering macro fears, or maybe they're focused just on the very short term.
Could it be the seasonality thing they mentioned?
That's definitely part of the narrative. Management did say the first half of 2025 was stronger than expected, partly because of some tariff-related buying back in April.
So pulling orders forward into Q2.
Essentially, yes.
Yeah.
Which could make the second half look maybe a bit flattish by comparison, even though the full year guidance is higher.
So the total for the year is still up, but the quarter-to-quarter progression isn't as smooth?
Exactly. And the market sometimes dislikes that lack of smooth progression, even if the destination is better. They also flagged that Chinese customers, have pretty variable ordering patterns historically.
Hard to predict.
Very hard to predict inventory levels or perfectly map out orders. But management seemed confident the full year is on track.
So for investors watching this, what are the key things to monitor going forward?
Good question. You definitely want to watch the panel, customer product cycles, new laptops, tablets coming out, any news on monitor launches using OLED, progress updates on those big automotive programs.
And Q3 results, obviously.
Q3 results and guidance will be crucial for sure. Plus, watch the big OEM launch windows leading into the holiday season for PCs and IT. And, broader things like potential interest rate cuts could always give consumer hardware a boost.
Okay, makes sense. Now let's pivot to our signature segment. This is not financial advice.
My favorite part.
Remember, everyone, we're just talking ideas here, brainstorming possibilities, absolutely not giving recommendations. But if you had to pitch a wild, maybe outrageous, but still plausible trade idea based on everything we just discussed, what would it be?
Okay, outrageous but plausible. Here we go. Given the strong fundamentals, those huge growth runways in IT and auto, the blue PHO breakthrough, and the fact stock has lagged so much despite all this,
Yeah.
I'd pitch a long-term multi-year bullish play, specifically establishing a long position in universal display, ticker OLED, using out-of-the-money call options dated way out, like January 2028.
Whoa, 2028 calls. That is long-term and out of the money. So you need a big move.
You need a significant move, yes, maybe targeting a strike price 20-25% above where it is now.
Okay.
The rationale is simple. The market today seems fixated on short-term seasonality or macro noise.
Okay.
It feels like it's potentially overlooking the massive catalysts that really kick in over the next few years, those Gen 8.6 fabs really ramping in 2026 and beyond, unlocking that IT volume.
The automotive growth hitting that 3x number by 2029?
Exactly. And the broader rollout and impact of Blue PHL improving efficiency across the board. The current market funk, this disconnect we've been talking about, maybe it's a compelling entry point for someone willing to bet on those multi-year tech and market cycles fully playing out.
That is definitely a bold, long-term view. Betting the market eventually catches up to the technology story.
That's the essence of the outrageous but plausible idea. Leverage the current pessimism for long-term gain if you believe in the story. Again, not advice.
Absolutely not advice. So, wrapping up, universal display. A quarter with really impressive financial beats, a clear roadmap for growth fueled by OLED tech expanding into big new markets.
IT, automotive foldables.
Yeah. Yet we saw this cautious, immediate reaction from the market, a really interesting disconnect for you, the listener, to think about.
It really underscores why you need to look past the headline number sometimes. Understand the strategy, the technology shifts. The future of displays looks incredibly bright, quite literally, and universal display is right in the thick of it.
We hope this deep dive helped you connect some of those dots and maybe anticipate what could come next. What's your key takeaway from all this? Let us know. Join us again next time for another deep dive into what's really moving the markets.